Finally tonight, we have our Market Monitor segment. It's the first of several stock picking segments that we'll be bringing to you during this abbreviated holiday week. And tonight's Market Monitor has 3 dividend-paying stocks that he says have strong fundamentals and attractive valuations. Now, the last time he was with us was December of 2016, and at that time he picked Cypress Semiconductor, which is up 33% since then, Cigna, which is up 49%, and Sherwin-Williams up 52%. Don Wordell is back with us, Managing Director and Portfolio Manager at Cypress Value Advisors. Don, good to see you again. Welcome back.
Thanks for having me, Bill.
Those were such great performers. Do you stay with those? Do you sell them now? What are you doing with those 3?
Right. Well, we still own Cypress Semiconductor and still think there's quite a runway of growth there. Whether it, just because of all the products that their analog semiconductors are in, and they have a big move in margins coming. We think they can end the year with margins much higher than where they are next year. I'm talking about with margins much higher. So we think we'd stick with Cypress. I'm a mid-cap manager, and so it's a great reason to sell. It's my favorite reason to sell, which is when stocks like Sherwin-Williams and Cigna get up into the $40 billion range. I turn that over to the large cap folks and let them have it. But I think that Cigna and Sherwin-Williams are 2 fantastic companies, and would not be afraid of owning those stocks in this environment.
They just outgrew your portfolio. Got it. All right, let's look at 3 stocks you like now. Do you like them because of their dividends? Let's go through each of them here. First one is Zimmer Biomet. Tell us about it.
Sure. So Zimmer Biomet's a medical products company, and we like the characteristics of dividend-paying stocks. We're not yield investors. We just like the dividends and what they provide us. More than just yield. And so when you look at Zimmer Biomet, the dividend yield is not exceedingly great or anything, but it's just, again, it's something we like to see in all of our companies' capital allocations. Zimmer, right. The catalyst here is the new CEO. They brought a new CEO in from Medtronic. The stock's got a big margin difference from its competitors, as well as they've had some execution issues on getting new products to market. And we think that if they can execute over the next 12 to 18 months, the valuation gap and margin gap closure will drive the stock price much above where it's trading at right now. So we really like Zimmer.
Okay. Very good. Let's quickly get these other 2 in here. Here's an infrastructure play. And I keep hearing infrastructure may be big next year. You're picking Marietta Materials.
Sure. So Marietta Materials is great. Again, this is a company that's going to benefit from the rebuild in Texas, the rebuild in the Southeast from all the natural disasters. And then you also have just the state highway funding bills are going to provide a long runway of growth for them. They have pricing power. Rocks and aggregates, you can't make them in China, and you can't sell them on Amazon. So it is a great business model, great company. And then if we do get a federal infrastructure bill, it's going to be icing on the cake for this company.
And finally, a familiar banking name, First Republic.
Yeah, no, First Republic's great. They're out with a growth strategy that I really like. They're going out and trying to grow their new customers by refinancing their student loans at very attractive rates. They're being very particular about the industries that they're doing that for. So then the hopes of 5, 10 years down the road, there'll be wealth management, there'll be home loans, there'll be other loans that these people will have that relationship with First Republic and use them for. So we really like this company. Great management team, good company, and think they're going to do very well over the next 12 to 18 months.
Very good. Great stuff. Don Wordell from Cypress Value Advisors. Thanks for joining us, Don.
Thank you.